All right, live and direct like we are every Monday morning for a Monday market update. I've got Nash Paradise, Director of Sales at UMortgage, Loan Wizard with me here today. I'm Matt Gougé, Matt the Mortgage Guy. We're going to talk about what's going on in the market, what's going on with mortgage interest rates, what's going on in real estate, and hopefully bring you some news from the front lines. Nash and I are both active originators, so we're in the trenches talking to consumers, talking to real estate agents, talking to fellow loan officers, and we're bringing it to you live and direct. How you doing, Nash?
Doing good, man. Had a busy weekend, went to a lot of open houses, talked to a lot of people, enjoying the movement that we've seen here in the real estate market just over the last couple of weeks. It's nice seeing everyone getting back out there and trying to make some moves, trying to win some deals.
Yeah, I had a similar weekend where, all week I'm grinding mortgage. And so what better thing to do on the weekend to relax than to, go out there and have dozens of real estate conversations. But took my 12-year-old. He's seen no less than 12 or 1,500 open houses in his career as a son of Matt the Mortgage Guy. And a fun practice, if anyone out there is wondering a way to, create some fun, popping into open houses. Besides just checking out real estate, I enjoy that part of it. Just real estate is cool. Have your kid give unfiltered feedback on every open house. What's your favorite thing? What's your least favorite thing? I try to not do it in front of other clients because you never know what you're going to get. It's like, Forrest Gump said, it's like a box of chocolates. Never know what you're going to get. But he'll tell you if the closet in the master bathroom stinks, and he'll tell you, exactly how he feels about things. He gave some good feedback this weekend. I think he realizes he's going to play nice and then talk about the good things more than the bad.
Love it. Yeah, we definitely had a couple that smelled like feet. But speaking of things that don't smell like feet, let's talk a little bit about what happened in the market last week if we want to jump into these slides here. So looking at last week's economic news, there's a bunch of stuff on here. I'm going to point out the things that are relevant. Looking at the numbers, Tuesday, new home sales was pretty interesting. It came in right in line. Still low, very, very low comparatively year over year. Looking at continued, Thursday was a big day last week. We had jobless claims, continued claims, GDP for the fourth quarter, and everything was pretty much spot on. We no major detractions there. Everything was, where it was expected. So we didn't see any huge movement late last week. And then on Friday is where we got the core PCE month over month inflation figures. Those actually went up a little bit. We missed from a 0.3 projection and then wound up at 0.4. And, we saw some pretty good movement in the bond market on Friday and a nice little rally because of that. But as much as that had to do with it, honestly, I think it was more the tariff discussion, just like it's driving things this morning. Stock market is going the wrong direction. Money is going into safer places like bonds, sending our yields down, which is improving interest rates.
Cool.
Let's take it. Let's keep moving.
What do we got this week? Jobs week?
This week, well, we got a lot of job stuff last week. This week we got JOLTS. So let's run through these here. Tuesday is JOLTS job openings, which are going to be interesting to see. We also have the ISM manufacturing PMI coming in tomorrow, which is pretty big. But honestly, Friday is my favorite. Friday is our big day. Non-farm payroll, unemployment rate, and Powell is speaking. So Friday is going to be a big day. As much as the econ news matters, lately politics matters more. Tariff discussion has been moving everything despite, the economic indicators. It's the tariff discussion that's sending money out of the stock market into the bond market. So will we continue to see that this week? We may, we'll see. But, so far the projections for all of this data is lining up to be fairly consistent. Non-farm payrolls projected coming at 128,000. Unemployment rate should rise just a little bit to 4.2%. We'll see where that goes on Friday, and we can talk about it next Monday and whether or not that has any relevancy into the stock or bond markets.
Cool.
Love it. So just to go quickly through this, because we've touched on it a few times, no real major changes here. We're expecting our first Fed drop to be in June. That is consistent. So as you're looking at this sheet, the blues are where we've got a majority. So right now we're at that 425 to 450. As of the May Fed meeting, which is the next one, very, very low chance that we get a rate drop then. It is increasing a little bit as we keep moving through the year, but I'm still not expecting any kind of rate drop. Nearly 93% are anticipating that drop to hit June 18th. So that's a very, very strong one. And then interestingly enough, a second drop possibly in July now. In fact, the majority says July. I had thought that we were going to be looking a little closer to the October timeframe, but these things are advancing. So right now what the chart is saying is we should see our second rate drop without a doubt by September. The September is almost 100%. If you look at that 375 to 400 range and the 350 to 375, you've got nearly 100% of the dot plot saying we're going to have a second drop by September. And more likely than not, that's going to happen in July. If we do drops back to back in June and July, I think that'll be not necessarily great for interest rates. It's a lot of drops in a short amount of time. We'll talk more about that as we get closer to it. And then, we've been talking a lot about that third drop. Are we going to get it? Well, looks likely. Almost 100% certainty on this that by the 12-10 decision, we have a third rate drop this year. So I think we can move past, the assumption that we're only going to have 2 drops this year. It's going to be a 3-drop year, and it really just comes down to timing. Are we going to see back-to-back rate drops in September and October? Are we going to see June, September, and December? I would like to see June, September, and December. I think that makes the most sense. But definitely 3 rate drops this year, which is different from about a month ago where it was 2, maybe possibly a third, but now it looks like a third is basically guaranteed.
Yeah, about a month ago, I was having that conversation where somebody was saying it was crazy to think that we'd have 3, and now we're like 87% shot that we're going to have 3 by December. So
no, that's 100% shot, because that you add that 12.5 on there, because it's not that it stays higher. It's 87 that we're there in December, but also 12.5% say we have a 4th drop at that
which
point.
Is wild to think that that's even on the table. So yeah, you're right. It's like we're going to have at least 3 according to this chart, which this thing 4-6 weeks ago was completely different. So like you said, we'll discuss it as it comes, and we'll see how it affects mortgage interest rates. What people need to remember is Fed rate cut doesn't always equate to mortgage rates going lower. So we'll see, and we'll discuss as it happens.
Yeah, I think the talking points here and the takeaways for anyone watching this is just another bit of information to share with your relevant partners. Share with buyers, share with real estate agents, share with other lenders, whoever you're talking to and working with is, hey, it does look like we got a third rate drop this year. That means everything is trending in the direction that we expect it to, which is going to be good for, long term, it's going to be good for rates going down. So speaking of rates, I did guess the next chart. Let's talk about this a little bit. Overnight average rate right now, as of Monday morning, 6.76%. That's reflected in the blue line here. And we've had a few weeks of stagnation. Matt, what's your take on everything just staying right around that 6.75 marker?
Yeah, we spoke about it previously. I like it. I like less volatility for buyers. And as we go into the spring buying market where there's the most buyer activity, the most buyer action, having rates that are staying within a range, I think is helpful. So buyers know what to expect. They got pre-approved 4 weeks ago. They were looking at homes and they were using 6.75 maybe as a default interest rate as they were running calculations on different purchase prices. So I think it's good, and I think we'll likely continue to see the same, barring any big economic news. And so just when you get pre-approved, like we've talked about on here before, 675 might be 25% down, 780 credit score, and paying a half a point. You need to know exactly what your kind of default rate is. So that's part of the pre-approval process, is getting something tailored to you. Then you have some sort of mechanism whether it's reaching out to your loan officer, or they give you some Excel spreadsheet or something to track it on your own. But you want to know, as you're shopping, if I pay $418, what does the mortgage payment look like? Oh, if I love this house and it's $435, what does that look like? You want to be able to know those numbers so that you're not buying the biggest purchase of your life on emotion. You're buying it with a little bit of reasoning and thought behind it. And so, long-winded way of saying I like it when these things are less volatile.
Agreed. Do we have any more slides, or is that it? We stop on rates and we can talk takeaways? Yep. That's what I thought. So my takeaways on this, looking at rates staying consistent, is balanced. Balance is good. Like you said, people who were pre-approved a few weeks ago are going to still be pre-approved now. We're not going to see any kind of massive changes with interest rates this week, most likely. We've been hovering in this range for a while. We're pretty far past resistant points on the 10-year treasury. We're nice smack dab in the middle. And, looking at the 25 and 50-day moving averages, they're all starting to even out. So balance is good. Balance is good for everyone. It does mean that professionals are going to need to step up, and real estate agents and loan officers are going to have to be, communicating really well on where things are going. You're not going to have the benefit of, well, hopefully rates drop a little bit before we get this going, or I can just guess and estimate these figures because, well, I don't really know what's going to happen. It's too volatile lately. Well, we've been pretty consistent now, so that should make a good, clear communication. Should make it a little bit easier for home buyers to have a good plan on how to execute. And if we're taking action now as the market starts to heat up, we should see a lot of wins.
Yeah, agreed. You want to touch real quick on the latest news in mortgage and real estate, the acquisition by Rocket, or not interested?
So, there's always something to say about the new Mr. Red Rocket. Rocket, who acquired Redfin, and then now Mr. Cooper. It's one of the largest servicers on the planet. It's just all in their ecosystem. They've been very clear and transparent about what their plans are. They want to own their borrowers from start to finish. And they're banking on the fact that, 80% of clients don't need a professional, that it can be done with artificial intelligence, that all they really care about is, I'm just going to take this rate. I don't need to know what works best for me and my family. And okay, in a refi market, that is mostly true. I mean, you do need good math. You need someone who knows what they're doing. But at the end of the day, a lot of people can say, I'm going from a 6.5 to 5.5. I want that. And they'll still be fine. Purchases aren't that way. When you're trying to compete for a purchase, as we're going to be having going forward, having a professional in your corner has never been more important. I worked through 2020, 2021, just like you, but I also worked through 2009, 2006, 2014, bunch of different markets. And in every one of those markets, there was a huge advantage of having a local professional representing you, both for accuracy, but also just for competitiveness. Sellers know, selling agents know, like they want a professional on the other end of that pre-approval letter. And so we'll continue to add huge value for our partners and for our borrowers. So this is kind of a non-issue. I think it's interesting that when you see acquisitions like this, it means the market is shifting, and it could be shifting in a way that's good for all of us that are in real estate, but it's still a little too early to tell on that. But the end of the day takeaway is it's not really our competition. Those are apples versus oranges. A professional mortgage broker is a different type of experience than someone who was delivering pizzas 6 months ago and is now taking loan applications over the phone.
Yep. Yeah, I got a lot of stuff to say about it. You'll probably get a 10 or 12-minute video from me on my YouTube channel, but a couple quick things that come to mind. One, like you said, different type of professional that you're going to work with, and Rocket would probably admit this. They have huge call centers with loan officers that are just trained on a script, which doesn't really help in competitive purchase markets. Like you said, if I call the listing agent and I say, hey, Hillary, Matt Gougé, UMortgage, that helps the buyer get the offer accepted because they know a professional has reviewed it, pre-approved them, I can close it quickly, versus a pre-approval that came from a call center or artificial intelligence or whatever the case may be. The other thing that I think is important to remember is I've heard it from the inside. I've talked to so many people that have worked at Rocket where it's like a deal is a deal regardless of how it affects the family. And they've got metrics to hit, and they're, having sales competitions around how do I close another loan. That is really, really dangerous when you're the consumer on the other side and, you refinance a loan into something that really hurts your financial future. That scares me. And I dug into data, Nash, about like specific credit buckets. Rocket was doing more cash out refinances where the spread was 2, 3, 4% higher on the mortgage rates. And like the number that they were doing on the lower credit scores, it just screamed, what's the right word? Predatory? Mm-hmm. Yeah. And it's dangerous, right? Mortgage and debt can be a super valuable tool. But when Rocket, who is known for doing some of this predatory stuff, refinancing people where it doesn't make sense just to make another dollar, and then they go and buy the largest servicer of loans where they can now call you and go, hey, we're the ones who collect your payment every month. We'd love to talk to you about a refinance. Yeah, going from 3.25 to 6.75 is going to raise your payment by $1,400, but don't worry about that. We'll help you pay off $17,000 in credit card debt. Like the type of stuff that people are going to be pitched. I'm afraid, but I'll do what I can to warn the masses. I'll have plenty of public service announcements around that. Last point, like you said, there's some people saying, what does this mean? When mortgage companies are acquiring and they're getting ready to, do more business, does this mean that mortgage rates are headed down? It could be. We'll see. But anyhow, I've got a lot to say. I don't want to keep us too long here.
All good, man. I look forward to seeing your YouTube with a thorough explanation and breakdown on that. And, then I look forward to you standing on the street corner, holding up signs, yelling at cars because, you got to get the message out. Yeah, you got to get the message out. I'm here for the people, buddy. Enjoyed it, man. We got that target circled for Friday, non-farm payrolls and unemployment rate coming out. Other than that, that's all I've got this week. We will be back next Monday to recap everything that we've heard, get some updates on what's going on with other acquisitions, and figure out how we can win in this market going forward. Sounds good. See you then, buddy. Thanks, guys. Take care. Bye.